Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Moshe Milesvsky. Moshe is a finance professor at the Schulich School of Business at York University, and he's the author of the new book, Are You a Stock or a Bond? Moshe and I are going to talk about diversification. Moshe, when I look at different asset mixes for different investors, I always find that different people will come up with different answers for the same person. It's not an exact science. Why is there so much variation?
It definitely is not an exact science. It's actually just as much art as it is science. And in fact, when you do come up with asset allocation recommendations, they really should be very broad brushstrokes. 10%, 20, 30%. You really shouldn't go into a second or third digit because of the fact that there's so much uncertainty in these models. We can't really give a high level of precision.
So you're saying whether I have 70% bonds or whether I have 73.5, that's not a huge difference, and I don't need to sweat that?
I think that anybody that takes an action to adjust a portfolio because it's gone to 73 when it should have been 70 is overreacting.
Okay, you know, there are a lot of new products on the market, wrap products. They basically give the investor an entire diversified portfolio in one single package. They're usually made up of individual funds, and some of them have like 12, 15, 17 different funds. Is that overkill?
At some point, although diversification in itself can't be harmful, but at some point the marginal benefits become very, very small and almost close to zero. So I really don't see the value of this extreme granularity in financial planning.
Okay, I'm building a portfolio for myself out of mutual funds or exchange-traded funds. How many do you think I need for a balanced portfolio?
Well, it's not so much the number, but it's the sectors. You have to make sure you have domestic and international exposure, large cap, small cap, value, growth. I think it's about covering the geography of the economy in the world as opposed to a number.
So could a half dozen do it, do you think?
Well, nowadays you can actually buy a global portfolio and do it with one. You have an ETF that's linked to the Morgan Stanley World Index, and you've covered the entire equity market with one.
So it's the quality of what you hold, and the quantity is not really that relevant.
Absolutely.